Good morning, good afternoon to everyone dialing in. I'm going to present really on a rapidly evolving trend, a very timely topic, really the next generation of underwriting and risk assessment from a life and health insurance perspective. Whilst this is not a new topic of predictive modeling and machine learning, really the case studies I will allude to today that Munich Re has been pioneering in Asia in particular have really shown a maturity of implementing AI in underwriting for various business problems and strategic objectives. And I hope to leave you with some understanding of what augmenting underwriting with AI means and what is involved, the kind of capabilities needed, and how to begin this journey. Before I begin, maybe just to take the pulse of this trend at the moment. And if you look on the right, many companies are wanting to evolve beyond the pure rule-based approach to underwriting toward more intelligent systems. And in the process have used machine learning models to streamline and transform underwriting. And in the process, they've also realized that implementing these models into business processes and system environments has its own set of difficulties. And that requires modern IT technology. And that's why you see examples here from Gartner of integration difficulties. And that is a modern pain point of machine learning, which Munich Re's technology has addressed and is able to actually deploy these models. So just to outline at a high level, I'm going to focus today on augmenting underwriting with AI, but of course the same can be said for claims processes and also generating sales through propensity to buy, cross and upselling. At a very high level, I'd want to call out a few key points that you need to think of in succeeding with AI. No model is perfect, and therefore it's important to understand what the error of model means for our future profitability and claim experience. And that's why Munich Re has built comprehensive risk implication methods to quantify the risk from models, minimize them, and ultimately accept the insurance risk that on business that uses these models. And that's essential to really gain internal approval to use AI. Second, you need the technology to implement these models, often at point of sale for real-time scoring. And this Munich Re has, and we believe is essential to derive business value. And of course, you need proven ability and experience in the learnings in doing this. And through some years now of working in multiple countries, we believe we've gained this. In terms of our future vision of underwriting, clearly an ecosystem of data will be involved, and that will lead to models and insights and dashboards, and multiple models across the ecosystem, the value chain, as you see. And lastly, these models, as mentioned, they need to be deployed into systems and processes. For those thinking that external data is really the go-to place, I'd want to also just caution that your existing data, auto underwriting data from your rule engine, as well as your back office data, can provide significant value. And I'd urge you to consider that as the start. Of course, external data like physical activity, smartphone, bank, etc., should be actively looked at, linked with other data sets, and really to assess the value of that data for transforming underwriting, product development, dynamic pricing, etc. So moving on to augmented underwriting, this would be a typical example of the point of sale, end-to-end process. Most companies that have a auto underwriting rule engine have some level of automation in the form of straight-through processing. And despite that, they still deal with a large number of referred cases that go to human underwriters. And from many projects in Munich Re's experience, we can see from the back office data that over 80% of many of these these case study data sets are actually being decisioned as standard risks, and therefore the question of why they're not being automated in the first place arises. So in this hypothetical example, you can see 50% of all policy applications were referred for underwriting and finally standard, and therefore Munich Re has really developed AI capabilities to predict these final decisions at the point of sale And by knowing which cases will be finally standard, we're effectively rerouting them to be automated in the first place. Now, in pushing SDP to higher levels, the risk implications for future claims have to be considered, like I mentioned. There are a range of other pain points that AI can assist in addressing, whether it's streamlining the application form, predicting early claims and non-disclosure at point of sale. For example, under disclosure of BMI, customers that don't disclose smoker status, medical conditions, etc. We can actually detect this with models at the point of sale, and we've been quite successful with several clients, across Asia in doing this already. And that is going to really reduce the impact on profitability from those business problems. So, why solve these problems? Essentially, it's about improving the customer experience and operational efficiency, and that manifests in all the reasons you see below. The one point just to call out is in increasing automation or streamlining application processes, the risk implication for future claims has to be quantified, and that's essential to getting your risk management colleagues to approve and to vet this approach. Munich has had a lot of experience, as I'll demonstrate later on. But moving along to the solutions to these problems, this is our view of the next generation, moving beyond the rule engine to really driving risk assessment with AI, not alone, of course, but in conjunction with rule engines and external data sources. And here you can see essentially a whole collection of machine learning models will work together to power this process. Firstly, around automation and streamlining. Secondly, around the accuracy of risk assessment, where combined together, straight through processed cases will go straight to policy issue, and high-risk cases can be flagged for further underwriting. So just to give one example of increasing SDP with quantified risk implications. This is an AI risk calculator that we've developed, which helps an insurer know what an increased SDP level would mean for their future claims. And essentially, in the top right here, we have a new underwriting process flow. And this shows how applications go through both a rule engine and an AI model, where both the rule engine and model can bring automation. And it's essentially a hybrid solution, where the final SDP is a combination of automation from the rule engine and the model. In some cases are knocked out going through the rule engine, and others are being automated on the spot by AI models. And those models, like any model, are, of course, having some errors. And that's why we need to quantify that error with data science metrics and translate that into actuarial and pricing implications. And this is a risk calculator that allows you to fine-tune which cases go through the model and which don't, and therefore to reflect your risk appetite. So this is essential because those errors from the model will be manifesting in your claims experience, and therefore you need to price appropriately. And there's a whole lot of deep dives around this calculator. For example, which medical conditions should not go through the model, which ages, BMI, etc., high sum assureds should be flagged out to the normal underwriting process. And just moving on from that point, in terms of risk implications, like I showed before, really just to illustrate, the first point would be in increasing SDP. You need to understand for every level of SDP, there's a particular level of risk associated. And for just to reiterate, what are we talking about? A model that predicts a standard outcome where the existing process would have given a non-standard outcome. In other words, should have been conditionally accepted, declined, or exclusions. That's a false positive outcome. And that's really the start of the risk implication approach. So we have a comprehensive methodology to translate that into pricing implications, looking at the loadings, the exclusions, etc. And that's quite a detailed actuarial process. And it results in a comprehensive risk implications report. And this report is essential to gain your own risk management's approval and comfort. And often companies today have governance committees that have to approve machine learning models. And we believe that this comprehensive approach, particularly from a company like Munich Re with our experience, is essential to gaining those approvals and actually managing the risk appropriately. Beyond that, there are a range of things that can be done around streamlining the application form, understanding which questions are important and what is the risk implication if you remove questions. We're also looking at predicting factors from photos of customers like BMI. This can detect under-disclosure of BMI. Early claims and non-disclosure, of course, is an old problem, but it impacts our profitability. And what we're looking at here are early claim and non-disclosure prediction models at the point of sale. And these models are effectively flagging out high-risk customers at the point of sale and flagging them out for appropriate underwriting action before the claims arrive. And for the low-risk cases, they can actually be decisioned by other predictive models that predict the underwriting outcome. So this is just an illustration of how multiple models can actually work together. And we've actually seen early claims in the first policy year where the cause of claim wasn't disclosed during underwriting. And a model can be trained to actually predict that and hence reduce its impact on claims. We're also looking at incorporating the claim experience into underwriting risk scores. In terms of external data, things like smartphone and physical activity, we're looking at how to transform the underwriting process with that data and how to streamline it. So in summary, augmented underwriting is trying to take the BAU process defined as rules, rule engines and human assessment and augmenting it with AI. In terms of the marketing cases, propensity to buy obviously can help to generate sales by targeted offers, helping to really target products at the right customers based on their needs. But once you've identified who to make an offer to, you should ask about how to customize the underwriting journey for better experience. And that's where predictive modeling can help to streamline the underwriting with known risk implication. So the sales use cases and streamlined underwriting can be done together. In terms of the technology enablers, like I mentioned, in this next generation, the cloud is going to be quite important, as will integration via API to insurers' systems, as well as the ability to monitor performance of models in production and to actually continuously update them for new data. Now, onto some case studies. We've been quite privileged to work with Great Eastern in really helping them improve SDP. And effectively, we've more than doubled the SDP with acceptable risk implication in pricing. We've looked at machine learning models that deal with life benefits, disability, CI, even medical and health. In terms of our approach, comprehensive approach involving building the models, bringing our domain knowledge, quantifying the risk like I showed in the risk report, implementing them with Munich Re's modern technology, cloud infrastructure. We've even helped to build comprehensive dashboards that monitor the risk, as you can see here. This reflects a lot of our domain knowledge around the business KPIs, and this monitors the models in real time, data science performance metrics, monitoring the new business mix, etc. And on the right, this is helpful to decide when you need to retrain a model with new data to make sure it continues to perform. And that's essential to managing a risk. Now, these models do actually get integrated with the rule engine, for example, of Munich Re, as you see here. And that's essential technology that we offer, which most other rule engines don't support. And finally, you need to decide on the new business process flow for underwriting, where the rule engine and model are defined, and you know exactly how the outcome of the model will be used. And that's just to name one from Great Eastern. We've done this in Singapore, Malaysia, South Africa, multiple other countries. This is the typical scope of support that companies will need to succeed and that we offer. Firstly, understanding your business problems and what your KPIs are critical. What is the definition of success, a potential scope for an AI initiative, being clear on whether the required data is, adequate data is there. What about the tech landscape? What systems are involved? Where does the data come from? Do those systems allow integration of predictor models, etc.? So really forming a concrete initiative. Beyond that, there's the extraction processing of the data, which requires deep domain knowledge, which we have. Rule engine data is complex. You need sophisticated data science and domain knowledge to process it. Beyond that, it's building the models, translating their outcomes into business or risk implications, like I mentioned, and then in the last two phases, dealing with the maintenance of the models. So just to illustrate, in terms of the types of data from a rule engine, these would be the typical types. And for those that think this form of data is simple, here's a typical example where we process a complex format into a really simple format on which models can be trained. Of course, exploratory data analysis is crucial. And beyond that, developing the models and so on. We have done the same for claims, where medical claim rule engines are being augmented with AI, and this is to achieve further automation as well as to detect fraud, waste, and abuse. And here's an example where on the right you can see the SDP for claims as a combination of the rule engine and the model, so the end-to-end SDP. And you can see for every level of SDP, there is a false positive and false negative claim amount associated. And this helps an insurer fine-tune the amount of automation they want to their risk appetite. And you can see on the bottom, we've actually mapped decisions at the rule level to the claim level decision, and even the back office human decision. And that's quite revealing in and of itself. So this is really a hybrid solution that we offer in the health claim assessment process. And these are some of the reasons to do it, right? So in terms of where to get started, we highly recommend a discovery session, and we would be delighted to talk through your business problems. You need to figure out really the objectives, what kind of scope is meaningful, and be clear on how to measure success, to actually check that the data available is adequate. The data from back office systems has to be linked with various other data sets. To understand the technology dependencies is important. Cloud infrastructure, can models be integrated with your system environment, etc. To look at a cost-benefit perspective is important early on. And then to come to a concrete scope. Beyond that, obviously, Munich Re can support end-to-end, from processing the data, the models, the risk implications, their deployment and maintenance. And I think as companies mature, they're realizing the pain points of maintaining models in production. For example, when your underwriters change their philosophy or practices, how do machine learning models adapt? Can they be retrained in an agile way? For that, you need modern technology like Munich offers. So with that, I'd very much invite people to get in touch if you'd like to know more. We believe this next generation is fast emerging. We have the experience now to implement this, and we'd be delighted to partner with you in that journey. So thanks very much. Emily, back to you for any questions.
Awesome. Thank you so much, Lee. First and foremost, I always say, what a great presentation. I really appreciate you joining us today on the digital stage of Fintech and Insurtech Live. We do have a few questions that we'd like to ask you as we have, a couple minutes left, just over 10 minutes actually. So the first question is, how can I best secure internal risk management support to use AI in underwriting?
Sure. I think, if you think of the stakeholders that need to approve this, it would be your risk management office, your CRO, your chief actuary, and they will want to know the implications of this for the company's profitability, future claims, and they'll want to understand that the risks have been looked at holistically, can be monitored and managed once the solution's implemented. So I hope I've demonstrated today the risk implication approach, the monitoring dashboards, and the technology needed to update these models. And that risk implication report has been essential in our experience to securing that approval and often pitching to board level committees, even helping clients with the regulatory questions.
Fantastic. And I mean, obviously in your presentation there, the topics you spoke about are going to ask these sort of questions here. So we get a lot of people ask, what's the first step? How can we begin? Where's the first goal for me to achieve? So here's the question: It's what's the best first step an insurer can take to begin their AI journey?
Sure. I mean, I hope I've hinted at the discovery process as a first step. It really requires, a focused reflection on the business problems relative to the company's strategy, and I think also bringing the data to bear can validate business hunches about what problems to solve. So a discovery workshop is really the best place to look at this in detail, to flesh out detailed objectives and what a focus should be in a roadmap, prioritizing different problems.
Thank you. And now putting ourselves into the seat of someone who may be watching today and thinking, I want to start my own AI journey. They might be asking, is Munich Re able to support my full AI journey from solution development to implementation and also risk sharing?
Sure. I mean, I hope I've also demonstrated today that, firstly, that for a company to succeed, that level of end-to-end capabilities is necessary wherever one obtains it from, whether in-house or reinsurer. Once those models are live in production, you need to have those capabilities to manage them appropriately. Otherwise, all sorts of risks arise. So I think that is an end-to-end scope that we offer, and not just conceptually, but I think with our live productions in multiple Asian countries, I hope that's clear now that we can actually support clients in that respect.
Absolutely. We've still got some time left, actually. So I'm wondering if I can just ask you a few more questions and kind of carry on this Q&A session. So I wanted to ask, actually, obviously, the kind of industry that you work in, kind of with a focus on life and health. If you could kind of share maybe some 3 insights that you've learned over the past 18 months due to the COVID pandemic.
Sure. I mean, I think it's technology is just so important, and I think we've all realized that whether it's working from home, people trying to sell insurance, facing challenges of not having face to face. And I think technology, I'm a firm believer in using it in the right way for some kind of good, societal good. And I think one of the lessons has been, here's an example where technology and AI can be used to improve the experience of someone trying to buy insurance that is otherwise quite tedious and difficult to go through. And the kind of streamlining and automation we can bring really makes a difference to people trying to get the kind of coverage they need for protection. So I think this is an example where technology is fast emerging. It's still quite an embryonic topic. For AI in particular, it's a very unique type of technology to deploy these models. And I think just the learnings that we've had in doing that have highlighted how new this topic is globally, in fact. And I think it's just the beginning of really doing this in a sustainable way. So I think the technology has been quite a journey for us to get right, but I think we're there.
Awesome. And I guess kind of looking to the future slightly, and looking at kind of adoption time and really thinking how long it's going to take before this sorts of AI becomes every day in insurance. What are your insights on that? What's your opinion? How long do you think it will be? Maybe a few years, 5 years, 10 years? What's the scope here?
Sure. I mean, we're certainly doing our best to help clients along in their journey, and Munich Re's rule engine is widely used in Asia as a dominant technology, but that's just the beginning. Now that clients have that automated rule engine, what's next? And I hope I've shown the next generation is really the AI-driven approach, and we believe, I think, through partnership, that we can really leapfrog and accelerate that process. With our capabilities that otherwise would take significant investment to put in place oneself, and have to really undergo all the learnings to use them. So I really hope that it is a matter of the next 1 to 3 years that we see significant companies finding success to sustainably use AI in meaningful ways.
Fantastic. And maybe just thinking about the people watching today, is there anything you'd like to share? Maybe people are asking, how can they get into kind of researching this sort of thing? how can they maybe even get a job in this type of industry, and looking at these type of analytics and AI and next gen technology. Do you have any insights to share on that?
Sure. I mean, my background was really from an actuarial science perspective, and I got involved really over the last 10 years in various other types of academic research that led me down this path. And that's typically the path most current practitioners follow. It's really a hybrid of multiple disciplines they'll end up with. But I think really, in terms of training, the actual training skill set is a good place to start. But otherwise, for pure data scientists, there's multiple ways to study the theory today. But of course, teams like mine that are giving a wide range to data scientists across the value chain, we look at a pretty big geography, is a really good developmental opportunity for data scientists. So I think finding a stable place to get good exposure and that experience from, to learn from other domain experts. Data science on its own is not really valuable without a solid domain knowledge of the business, what you're working in. You need to be able to interpret the data in the context of the business or your industry. So having the chance to work with domain experts like a reinsurer has is really valuable, that data scientists pick up other skills and knowledge. And then I think they become truly valuable in solving problems. So, I think it's at the end of the day, they need access to data. So I think considering where they can access that and have the technologies and expertise in the company to pull it off in the end is important.
Fantastic. And just there at the start of your answer, you kind of obviously mentioned your team. And something I want to touch on is kind of how has this working from home environment kind of been for you? Obviously, I guess you have like a global team, right? So maybe this is something that you've been doing for a while, but can you share any kind of tips or anything that you've learned, lessons learned from working from home, any collaborative tools that you found were useful in this kind of new environment?
Sure. I mean, clearly COVID has had such a dramatic impact on so many different business and human and societal levels. But I think for us, it's been really fascinating to as a proof point for how functional we can be as a society, despite all the challenges many of us have had. But despite all of that, I think my team has remained remarkably functional. I think data science is an interesting profession in that you're dealing with IT in your daily job. You can do it remotely, and most of the capabilities you use are sitting in cloud infrastructure. So we've been quite fortunate in having high productivity, and even having the fascinating experiences as a leader to kind of hire people without even seeing their office on their first days has been fascinating. But I think it also shows the kind of resilience that younger generations have to find their way through that. So I think we're quite fortunate in what we do, in that the dependencies we have were still in place to still add value in the business. But I think as leaders, you do need to find innovative ways to inspire and motivate and develop people. So I think it takes a lot more passion and energy to do that. And especially when you have quite a big geography, by default, you're working with people all over the world, multiple time zones. So that is kind of a business as usual, even prior to COVID, managing that effectively. But I think in this case, it's just really using technology effectively and having the passion as a leader to inspire.
Fantastic. And just one final question, just to wrap all things up. I wanted to know your opinion on and kind of where you think the insurance industry is at in terms of technology adoption. Are we behind other industries? Is there a lot more that we can do, or do you think we're at a good stage right now and we're ready for the future?
Sure. Look, I think clearly from a digitalization perspective, I mean, all of us would know just from our banking experience that, banks are clearly much further along than most insurers are. So I think there's still some way to go in terms of fully digitalizing the onboarding journey. But now I think with AI, that brings a whole nother level to the discussion. And there, I think Insurers are dealing with mammoth legacy systems on the IT front. These are systems that have been in place for many years, often that haven't been upgraded for many years, and so there is a lot of disruption. There's a meeting of modern IT tech for AI with old legacy systems, and that's really where the rubber meets the road. And I think many companies have recognized that they need to transition, and I think they're making some investments. And others, I think, are still kind of looking at the business case of those investments. I think my advice to them would be to understand this is a long-term journey. That the path to scale is not linear, and sometimes it's seen as kind of a one-to-one. What I invest today versus return, but the returns from these investments are really long-term. This is an education that we're going on. So we need to be able to learn to use the technology properly and in the right way. And that's going to take all those ingredients I mentioned. So the sooner we start investing in the right talent, their skills, the right technologies, and how to leverage the other strengths we have in the business, the better. Otherwise, I fear that some companies will be left just too far behind.
Fantastic, and I think that really wraps today up quite nicely. That's all we have time for. So thank you so much, Lee, for joining us and for your amazing presentation. I hope to see you soon, and thank you again, as always.
Thank you very much, Emily. My pleasure.